heck of a lot worse. What's totally moving these days, though, is gold. And John Browne is here with us, Senior Market Strategist at Euro Pacific. John, love having you here. Love talking to you always. This whole gold thing, though, and I know you've been pushing gold for a long, long, long time now, but it can't just be a momentum trade. There's got to be some logic to it, no?
Yeah, Tracy, I've been pushing gold since 9/11, and it's up about just over 400% since then. Basically, I mean, I think you've got to realize that at 12.13, it's still only about 56% of its 1980 price in real terms as opposed to nominal terms, so there's still a way to go. And that's not surprising when you think that inflation is so low. In fact, we have deflation threatened, so that should be pushing gold down and down. But the fact is that people buy gold for two main reasons. One is a hedge against inflation, and it's beginning to happen now because with the feeling that the Fed is going to go to quantitative easing number 3 and government spending shows no sign of stopping, therefore people are going to start hedging against inflation more and more. But much more, and what's been the underlying upward pressure on the gold for the last year or so, is the threat of a currency crisis and a financial meltdown. And that is still there, still in Europe, still in the United States. That threat is still there, so people are buying. And then, of course, the dollar is falling in value, and therefore the dollar price looks bigger. And for those three reasons, the dollar price looks like it's going up and headed higher.
But you know what? You look at some of these ETFs, like, you know, the AUO, someone pointed out on the chat. These things have been on fire. I mean, it's very bubble-like. I understand what you're saying, that it's nowhere near where it should be. 13.14 is a fairly high price. We came to it very quickly. There's got to be something to the fact that people are uncertain about what's going on in D.C. There's got to be something to the fact that we're anticipating inflation, so when the inflation actually hits, the bubble bursts.
Absolutely. I mean, people are worried about inflation coming with quantitative easing number 3, and the absolutely amazing fact that the government has made no attempt to stop increasing the spending rate. And then, of course, as I said, you've got the threat of financial currency crisis, debt crisis, which is a camouflage for a currency crisis, and financial meltdown threat if that happens. And so for all those reasons, people are buying. Now, the great thing about the ETF is it enables people to buy less than 1 ounce. Gold is quite expensive compared to silver, and you can buy a silver coin for about $24, a 1 ounce coin, but a 1 ounce gold coin is going to cost you $13.20 or thereabouts, depending on the premium, and it's more expensive. So to buy the ETF, you can put in a little bit, and you can also use it for trading more easily. Once you buy a gold coin, then selling it back, got to assay it and so on. Whereas an ETF, you can immediately buy and sell in the market. And so the ETFs are probably a much better trading vehicle. The investment vehicle is more coins and bullion, gold bullion bars.
But you can argue that the trading vehicle is the reason why this price has been inflated so much. It's so easy to get into a gold ETF these days that it has pushed the price of gold higher and higher, has it not?
Yes, I mean, always in all commodities, I mean, you have speculators and investors.
Yeah.
And the speculators are a good oil to the machine, really, and so I have nothing against speculation. One's just got to be aware of it, and once you suck a lot of people in speculation and people think, my God, this is fantastic, you have to be wary.
Fair enough.
And expect corrections. You expect corrections. I think we're on a long-term bull on gold, but there are going to be waves. Nothing goes in straight lines. Be ups and downs, and so there'll be a huge rise. We'll have a corrective period.
Let's talk about the miners. Should I go there? Should I invest in miners like Barrick and things like that?
Well, I think it's a very good thing, but with the mines, you can't talk in general terms as you can in bullion or coins. You've got to be very specific. Each mine has a different lifting cost on average. They have different debt structures. They have hedged in different ways, and they have different balance sheets and different areas where their gold reserves are. Some are politically prone to war areas and so on. And so each mining company is different, and you have to be very specific about which one you get into, but in general terms, mining stocks are a very good idea.
Well, yeah, I guess if the demand keeps up. Let's talk about some of the other metals. A lot of people are talking about silver on the chat today. I'm a huge fan of titanium. Where do you stand on those other metals right now? Because couldn't you say silver is the poor man's gold?
I absolutely do. I write about it continuously. It is. Because, as I said, a gold coin is going to cost you $1,300 plus. A silver 1 ounce coin is going to cost you $24. So it is the poor man's gold. And, of course, silver is almost all used up by industrial use. And therefore, whereas there's still gold in the world that is mined and stored, there's not much silver. And silver is used widely in all sorts of industries. And in terms of bullion, it's undervalued. And therefore, when the mass market starts, when people really get worried, not people that watch your channel, Fox, and get the real news, but people who are getting the unreal news start to realize what you've been saying on your channel, they'll start to get into bullion. But they can't afford gold, a lot of people, but they can afford $24 to buy a silver coin. And therefore, that will be a huge mass market. And I think the potential for silver rising is faster and higher, well, faster than gold, actually.
Yeah, so could you argue at this point, gold's expensive, who knows where it's going to top? Maybe the smarter play is in the other metals, the titaniums and the silvers of the world.
Well, I personally have diversified quite a bit into silver, and I recommend to my people I advise to diversify into silver. Titanium is a very specialized market, which I don't pretend to understand, some of these very rare metals, which are basically used in industrial purposes, and you have to know each market much better than I deal in general bullion markets, vis-a-vis interest rates, vis-a-vis currency crises, financial crises, and things like that, and I restrict myself and my advice to gold and silver.
You're honest, sir, if nothing else, but to me, I would think it's easier to understand a metal that's being used in a product versus a gold bullion that I'm either wearing around my neck, like as a cougar and around my neck, or it's a doorstop. I don't know what else to do with it, right? At least I could visualize titanium, platinum being used in even home building products.
Yes, you're absolutely right. It's just a question of knowing each of those markets and the supply and demand curve. That's exactly right. But of course, as we go into deflation, and although statistically the economy is now out of recession, actually, if you ask everybody around you, most people are going to say, I still feel like it's a recession, particularly small businessmen, they still feel it's a recession. And so there's a disconnect between the statistics and reality, and the Fed is on the side of reality. The Fed fears recession. And it's the first time I've heard in my long life, which is now far too long, I've heard the government, central bank, wanting inflation. And so when you get that, you start to think, my gosh, I should be more heavily invested in precious metals, because that spells a much weaker dollar.
Well, you know,
people should be selling assets and investing in cash, and in my view, real cash, like gold and silver.
Many will argue that a little bit of inflation won't kill us at this point. All right, before we wrap, tell me, where's gold going? Where do we see the gold high price?
You know, that's like looking at a cat on the sofa and asking me when is it going to get off the sofa and which paw it's going to move first. I know the cat is going to get off the sofa, but I don't know when. And which paw is going to be moved. I mean, if you look, we're headed on a very bad track. We're headed towards a Weimar type of situation. And in those days, in the Weimar Republic in Germany, for a single 1 ounce coin, you could have bought a whole downtown city block of Frankfurt. So, you know, where it's going depends on where the governments are going. And if the governments are going to spend like they're spending now and not stop the unbelievable rate of debt and wasteful spending, then you could just add noughts onto the price of gold. But hopefully there will be a correction, and maybe American citizens will vote for a correction in this upcoming election to put some break.
One could hope, although if you watch the equity market, you got to believe it's pricing in some sort of more quantitative easing, more money being pushed in, because the market just keeps on going and it's on fire. You know what else is on fire? You are, John Browne. Thank you so much for being with us. Is it warm down there? It's got to be, right?
Yes, it's warm, but it's cool today. We've got a storm coming in, the very big storm, and so a lot of rain, a tropical storm, and a lot of rain, and for us, pretty cool. It's around about 70 degrees.
Yeah, I'm sorry. I can't be upset about that 70 degrees. We had that storm, though, yesterday. It was not pretty. John Browne, you're the greatest. Come back again, please. I love hearing your insights.
Thank you, Sajid.